Thanks for joining us on BloombergQuint. Now, the Indian automakers have now started to report the first set of months in the new financial year, and we're going to take a gauge of things how auto industry is now looking at in the ongoing financial year. To talk more about this, joining me, Shashank Srivastava. He's the senior executive director, sales and marketing at India's largest car maker, Maruti Suzuki India Limited. Shashank, it's always great to have you with us. Thank you so much for your time.
Thank you.
I want to start with Maruti's performance. The data says that the sales fell 5.6% year on year, and also if I look at as compared to last year or last month, the sequential data, the sales also fell to 11.2%. What's happening? I mean, to me, things have been better over the last couple of months. I think on month also the sales have been rising. What led to the decline, and what this signals for the industry?
Yeah, so I think we can take comfort from the fact that on the demand side parameters, that is bookings and inquiries, it seems to be pretty normal and in fact robust. We have to worry about the supply side, and I think the entire industry has been affected by the semiconductor shortage, which seems to be continuing. As you rightly pointed out, if you look at from September onwards, there seemed to have been a good improvement. Subsequent to March, where we reached about 95% levels of plant production, we have seen some stabilization, and we expected it to be much better. But I think we are now saying that in this quarter as well, the problem relating to supply will continue. And as a result, because you see the inflow of bookings to be pretty good, and the outflow of vehicles not as high, therefore we find that there is the pending bookings have gone up substantially. For Maruti Suzuki, it's like close to 300,000 now. So that is an issue, not just with Maruti Suzuki, but with the entire industry. Of course, different manufacturers are affected differently by the semiconductor crisis. But we are very hopeful going forward. It would be better. You asked when it would be 100% normal. It's probably very difficult at this moment to give us to give the viewers a sense of when it would be 100% normal, because frankly, even we don't know. We don't have the visibility going forward. It's almost like a day-to-day sort of situation which we are tracking, and therefore I'm a little apprehensive giving you forward projection on when things would be normal. But yes, you are right. From what we saw from September of last year, when we were just at 40% of production levels, we have seen a great improvement. 40% becoming up to 95% in March.
But the things have been improving until March. What led to this decline in April? Are there new set of problems? What's happening in China, the Russia-Ukraine crisis, which has really impacted? Because to me, the production should have gone up in April as well, because there is demand.
So of course, sequentially there is a point of sequential numbers, but you also have to look at the seasonal numbers. So when you compare, for example, I just gave you the figure for industry is about 294,000, which last April was 287,000. So there is an increase in the industry in that sense. So there is something to be said about plant production, which is dependent also on the season, not just on sequence. So sequence is an issue, of course. So if you look at retail, for example, it gives an entirely different picture. There is a huge increase in retail sales, probably because of the pending bookings, and also because last year there was an effect in April because of the COVID second wave. In the second half of April last year, there was a lockdown in many places in the country, which affected the retail. So when you compare it with retails of last year, the retail figure looks even more rosy. The third thing which, Nishant, I think you are quite aware of, is the inventory pipeline with the dealers is very limited now because of a continued pressure on the supply side. So you have, for example, today the inventory level in the industry estimated to be about 130,000 and 35,000 units. Normally it's about 280 to 300,000. So there is this issue, and that also impacts the deliveries to the consumer, and that is, I think, the core issue which OEMs are battling, which is how to increase the supply from the levels that we have seen so far.
But help me understand, are we better off from, like, let's say 2 months ago right now in terms of productions and supplies, I don't want to look.
So I would say a similar sort of level. I would say a similar sort of level.
So what is holding the industry back? Because I think everyone seems
Supply, of course. Of course, the supply, because
where
it's
are we
still
as
not
a chip?
100%.
Are we
100% normal is not there. That's what I'm saying. If you look at pending payments in the pending bookings in the industry, would be if like Maruti is 300,000, I would expect it to be about 5,500 to 600,000 in the industry. So that's a pretty large number. So obviously, supply is a big thing. And the other thing which I would like to point out, Nishant, is that we should not look at market side conclusions based on what is essentially a supply constrained market. People do, when they look at supply, they talk of supply. When they talk about market, then they look at those numbers without, as if they were without constraints. So we have to be careful not to conclude on the market side dynamics what is essentially a supply constrained market.
Is the supply, I mean, my question is very specific. Is the supply situations any better compared to last month, or they've gone worse? And
I have said it's similar.
It's similar. Anything, any fresh challenges which is holding the industry, increased supply chains?
So it is basically the semiconductor issue. I mean, that's the immediate challenge as I see it. By the way, if you look at average volumes, for example, of course, April is not really average, but that's the first month in the industry, 294,000. Last year, the average for the year was 253,000. And if you look at the average in 18-19, which was the peak year, the average was about 281,000. So in that sense, even with the peak year of 18-19, the averages of 281,000, this month beginning being 294,000 seems to be pretty, I would say, strong considering the limited the constraints on the supply side. So we have to watch out how this situation unravels as far as supply side.
What is your outlook for this quarter, the first quarter of the ongoing financial year? Is it going to be another muted first quarter like we have seen in the last 2 years? I think the first quarter, if I remember, in 2020 was muted, last year was muted. How does this year looks like for you? Because
so I'm not
first quarter was a washout, and that's how the overall sales derails from there on.
So I would say, of course, I'm not allowed to give forward projections for Maruti Suzuki numbers. So I will not be able to talk of specific numbers. However, I must say that when you compare with last year, May, for example, was extremely low month. For Maruti, I think it was just 30,000 vehicles or 33,000 vehicles. So when you compare with last year's quarter, it might look to be pretty positive because of lower numbers of last year. Last year, actually, the second wave badly affected retail. As you know, it was the worst period as far as COVID was concerned. This was last quarter, the first quarter of last year. So comparison with last quarter may not be a good indicator, but yes, we are looking at a quarter which would be reasonably good. It all depends on the supply situation, and we have a limited sort of visibility going ahead beyond that. And as I said, that's the reason why we are apprehensive to tell the viewers exactly when the situation will be 100% normal.
Right. What about raw material pressure?
The commodity prices, you mean, or the supply itself?
Commodity
the prices, obviously, commodity prices remain high. As you know, auto OEMs in our cost structure, roughly 75 to 78% of the cost structure is material cost. And material cost obviously depends on commodity prices. So any changes in commodity prices has a huge impact on our overall cost structure. And if you see the last 1.5 years, we have seen huge increases in commodity prices, and they have remained stubbornly high, belying our expectations that they will soften. So steel, for example, which was 38 rupee a kg 1.5 years back, still is in that 75-80 range. You have copper above $10,000. You have aluminum, which used to be $1,800, now beyond $4,000. So there is some sort of a rationalization as far as rare metals are concerned. And palladium might have actually stabilized, but rhodium still continues to be very high. So generally speaking, commodities have remained very high, and that's the reason why OEMs are under pressure on the material side costing, and hence the profitability. It is in this response to this situation that OEMs have taken price increases, as has Maruti Suzuki.
And that will continue to remain so. What is your visibility?
So it looks like while we were hoping for some softening, but it has remained, as I said, stubbornly high even in this quarter.
And then the last two bits will be on to understand what is your going to be strategy. I saw the numbers also said that while your SUV sales went up, if you look at the April month data, again, the hatchbacks and the sedan segments fared poorly where the sales declined. And I think the earnings call as well, Bhargav sir did mention that how you're losing out because of, declining market share in the smaller car segment. Are you going back to the drawing board, devise a chart, a plan, how to, increase your share in the SUV and what to do about you're losing butter, which is the small car market?
Yeah, so I think what our chairman was referring to was this structural issue, which seems to have cropped up because the effect of increased prices, which has come out because of commodity price increase, regulatory changes, some tax changes like road tax, registration tax, etc. They affect different segments differently. So as a percentage of the ex-showroom price, the prices of in the lower side has gone up by a larger percentage. And remember, the elasticity of demand for those consumers is even higher than the upper end consumers, and naturally so. I mean, it's naturally that the elasticity of price and the effect is higher at the lower end, and that is what he was referring to. Because the overall segment hasn't grown as much as the SUV segment. The SUV segment now is about 40% of the market, as against the hatches, which are roughly around just under 40%. It used to be 47, 48% for a long time. It's come down last year. So that is one side. Of course, we are still looking at supply side constraints. That's a different thing. But there seems to be a structural issue, which is what the chairman was pointing out, that if India has to motorize and there has to be greater mobility for all, you need to look at the effect that increased prices have on the lower end. Having said that, if you look at the market share for Maruti Suzuki in the non-SUV space, it's at its highest now. It's at 66%. In the last 5 years, it has grown from about 54, 55% to 66%. It's very, I would say, quite dominant. However, overall, the market share is falling to about 45. And the reason is because the segment which has grown 40% SUV, which is the 40% of the market, there our market share is pretty low. And when you examine it more deeply, it's largely because while in this space there are 47 models in the industry, we have only 2, which is Brezza and the S-Cross. Brezza is a market leader in the small SUV space, but it appears that 2 out of 47 seems to be rather lopsided, and we need to have a bigger portfolio in SUV, and that's what we have been pointing out. One of the strategies, clearly, if you want to achieve a 50% market share target, is to strengthen our SUV space, and that is what we will try to do going forward.
You're confident about reclaiming the 50% market share?
Yeah, so clearly, as I said, non-SUV 66% market share. So if we have a strong showing in the SUV space, it is fragmented, of course, at the moment. Definitely, it's going to help us achieve going towards that target of 50%.
Right. All right. So I think the summary of the conversation is the pain is not yet over. The worst is not yet over for the auto industry. It's a wait and watch.
Clearly.
And let's see how the challenges behave, work out in the coming months.
Yes. So it is like with a larger optimism than last year. So we are still cautious, but
cautiously optimistic.
Cautiously optimistic with a little bit more optimistic.
Lovely, lovely. Really appreciate it, sir. Always pleasure speaking with you.
Thank you. Thank you, Nishant. Always a pleasure talking to you.